Ameritrade Network to the conversation because, Jenny, there's another name we want to talk about here, which is AutoZone. And AutoZone, I look at the chart, it's about as clear of a V recovery in terms of stock price that I've ever seen, but it's not immune to some broad market selling as well. Down almost 3% today, $34. Big move lower here ahead of earnings.
Yeah, Alex took the words right out of my mouth. I was actually looking at their yearly chart compared to O'Reilly and Advanced Auto Parts. And it's interesting because between the three companies, their yearly charts are pretty much exactly the same. I mean, so you could say the trend across the board in these auto part makers is pretty much exactly the same, just based on their yearly charts. They have seen a decent rebound from their March lows, but like you mentioned, they're down 3% today with the broader market sell-off and about 1% for the year. So they all are still trading lower for the year. Now, it's important when you compare AutoZone to, say, an O'Reilly Advanced Auto Parts to compare the size. I thought it was pretty interesting, although Advanced Auto Parts has 5,000 stores, O'Reilly has 5,400, and AutoZone is the biggest at 6,000. But you're comparing, a matter of 1,000 stores. They're all pretty similarly sized companies. And they all, again, that chart is just fascinating. The way that V-shaped recovery, they've all seen it pretty much exactly the same. But some news specifically on AutoZone last week, Wells Fargo raised their price target on the shares to 1375 from 1300. And they said they will have historic fourth quarter results, and there's many factors that could push the stock higher. In addition to that, they also saw a pretty steep price target hike from Morgan Stanley, saying they're going to raise their price target to 1,500 from 1,140. So pretty substantial price targets last week ahead of these earnings, which makes me think that across the board, expectations are pretty high, and their earnings are pre-market tomorrow. Now, these are all bullish factors. Again, there was some interesting things that JP Morgan cited in their report. They said that warmer weather, these are companies that are affected by the summer months. They said the stimulus spending, people will have more money to fix up their cars. As we've seen with this DIY trend, since we're all stuck at home, it seems like we want to be improving ourselves in some way. So we're improving our houses, we're improving our cars. However, I am not an expert on this because I haven't owned a car, I think, in 8 years. I don't even know if I have a license that is not expired. I think mine expired a few weeks ago. But there's another thing to consider is that we haven't been going anywhere. So we have no reason to use a car. I haven't even Ubered in months. I mean, with the commuter traffic is down so much, you have to think that could possibly weigh on this company. Because, I mean, again, you drive down I-90 in Chicago, no one's on the road. So I think that's important to know. I know that it's summer and people are spending more time fixing up their cars, but commuter traffic is down, and I think it's going to stay down. I have to think that will weigh on these companies. But our first tweeter somewhat disagrees with me. So our first tweeter says, AutoZone earnings coming up, get ready to be shook. Money which would have been spent for vacation/luxuries has been redirected for home and auto improvement during the pandemic. So I completely agree with this. While we were not flying to go on vacations, we were possibly driving. You saw Winnebago has seen a crazy run because everyone, wants to get in their cars and go somewhere. I just think that day to day, the average driver is driving less, and that will have to impact them long term. But our next tweeter focuses more on the actual driving experience or shopping experience in an AutoZone. So our next tweeter says, I went to AutoZone to buy brake pads over the weekend. That entire store should just be a giant vending machine. They pay a lot of people to do a Google search and grab the part for me while a machine could do that, just saying. Now, I guess I kind of think this is the case for possibly any retailer, not specific to the auto part retailers. But Kevin, when you look at a name like AutoZone, is there any fear of, say, an Amazon or Walmart creeping up and taking some of this market share? Because it seems like with what this last tweeter is saying, that so much of this could be automated. Maybe you could just be ordering these parts online. Is there any fear from these huge e-commerce companies they could creep into this business and then maybe an AutoZone will be obsolete?
Ladies and gentlemen, that's Jenny Horn coming to you live, sponsored by Uber Technologies. Jenny Horn, you are the poster child for the millennial Uber generation that we find ourselves in. That was Jenny Horn talking about AutoZone. That is fascinating. So
I know, Kevin, I had to ask my dad about AutoZone because I was like, I've never been in one, I don't think.
Yes. No, that's awesome. So that doesn't mean there's still a lot of cars out there, right? And Jenny, you touched on something that was very interesting part of this conversation, which is, let's say you're driving for vacation this year instead of flying, right? Maybe you put new tires on your car before you drive, or maybe you change the oil and do it yourself, or maybe you do something like that would require, with all this time at home, a do-it-yourself, thought process about that. But, all these, remarkably, all these auto parts dealers and things like that are all doing extremely well. Not just lately, but for the last several years, they've been doing very well. That being said, this AutoZone's stock movement the last couple days is basically showing that when there's weakness in the overall market's broad-based rallies, no one's safe. Very few names aren't affected by that. And I think that's what you're seeing in AutoZone right now, Jenny.
Yeah, and Kevin, I think sometimes we get caught up in the bubble of our, immediate kind of life and stuff too. I mean, Jenny, we all live in the urban, center of Chicago. I know you're in the suburbs, Kevin, but back where I'm from in Nebraska, everyone drives. Everyone's got a car, and so there's still plenty of places across the country that aren't Ubering everywhere because it's just not what they do. And so I think that's still something to consider as well. But Jenny, great stuff. We'll see what happens when they report earnings. It's been an interesting story to monitor, and we'll see what unfolds. So we say goodbye to Jenny. We want to welcome in Andy Swan, the co-founder of LikeFolio.com. And Andy, that's where I want to kind of direct this conversation is, there might be plenty of reasons to think that more people are staying home, but as things are opening back up and things are starting to get closer to a normal, who knows if we'll ever get back to the complete normal. That to me sounds like more people getting in their cars and driving. And then on the other side, I don't know how to buy car parts. I need the expertise of the worker at AutoZone to help me.
Yeah, I agree. I think the idea of walking up to a vending machine with 100,000 possible parts that I could buy for my car sounds like a recipe for disaster to me. I like the idea. This is one of those few retail experiences where I really like the idea of someone being on the other side of the counter to help me understand what might work in my vehicle and what might not. But when we looked at this name at LikeFolio, I was really surprised with the results when I looked at purchase intent mentions over time. The one thing that didn't surprise me was the fact that AutoZone is seeing year-over-year growth in consumer demand and people talking about shopping at the stores. You can see that the red squares are the quarter they're about to report on a year-over-year basis. Really nice growth. I think that really doesn't surprise anyone. What does surprise me is that bar on the far right, which is a little bit faded because that's the current pace of the current quarter. And that's actually showing to be down on a year-over-year basis in terms of pace. It's early in the quarter, but it's still very concerning to me because what it tells me is, and I think Jenny alluded to this in a really interesting way, this company has benefited dramatically from stimulus payments and even from unemployment bonus checks that are being pushed out to people that don't have anywhere to go, but that are doing one of two things. They're either remodeling or renovating their home, or they're remodeling, renovating, or repairing their automobile. And so to see this down as some of those unemployment numbers or checks start to dwindle in size, as the stimulus kind of wears off, it's very concerning to me about AutoZone's organic business. I think it's very possible that they pulled through demand into the summer quarters because of the stimulus checks that just won't be there as we get moving forward. So I think as we go into this earnings call, it's one of those weird situations where I could see AutoZone coming out with really great numbers, but I think based on our data, if they're honest with guidance, they're going to have to be a little bit cool in terms of their enthusiasm for the upcoming quarter and for the quarters moving forward, because people are driving a lot less. That's one of the main factors that they look at. And the stimulus checks have seemingly run their course. There may be more to come, but I wouldn't want my company's next 2 quarters tied to the ability of Congress and the next president to get stimulus checks or something like that done.
Now, Andy, our conversation today is about AutoZone, but I want to touch on something that you just mentioned. With the drop off in AutoZone's purchase intent, are you seeing that across the board? Are you getting any macro information on drop offs based on stimulus checks, either waning or being cut off completely? Are you seeing that? Is that a broad based problem with some of the retailers?
Yeah, AutoZone, O'Reilly, Advanced Auto Parts, all very similar. We see it across the board. Mm-hmm. We see that the last quarter that's about to be reported, really nice. And then as we get into the current quarter that's actually going on right now, a little bit of a drop. And that pretty much puts everybody flat on a year-over-year basis when we look at it in terms of the last 90 days. And so I do think that it is an industry-wide phenomenon, and it's going to be very interesting to see how AutoZone comes out and talks about that.
Yeah, I think kind of another way to put, at least what I'm hearing from you, Andy, is the numbers could be absolutely monstrous for this company. It's been an awesome, consistent trend to the upside, particularly with your data and the growth. But it could be, largely this time around, at least, due to this extreme tailwind that this company had from stimulus checks. But let's face it, a lot of people were doing the things they put off, they kept putting off because they had more time to do it, or they were finally, at home to do home renovations, or they had that extra time to fix their car. And you're looking at this and saying, hey, things are trending lower. There's less stimulus checks, a lot of demand potentially pulled forward. What's going to be the catalyst to keep this growth up? And quite frankly, at least thus far, you're not seeing it.
That's exactly right. I think, in Kevin's example, if you needed a new battery or new tires or, new gaskets, whatever it is in your car, you wanted to repair the seats, you may have done that in June, July, August. But you're not going to do that again in September or October. And so I think this is one where that pulled forward demand, this is not a subscription-based model. They don't have any of those advantages of some of the other companies that we talked about, where it's great to get customers pulled through earlier, like Roku, Netflix, that sort of thing. They don't have that advantage. It seems like, to me, we're seeing it in the data.